Escorts, the stock has seen a good move since its lows of 100 rupees it hit in the month of June, and now because of good sales that we've seen in terms of tractors, the stock continues to move higher. Bharat, Madan, the group financial controller at Escorts, joins us now to talk about that. Mr. Madan, good morning. This month you've sold 5,600 units compared to 2,400 units in the month of August. Is it all pre-festive demand that you're seeing, and would you expect the festive months to be better than what you've done this month?
Well, yeah, so like September onwards, we normally see the festive demand setting in. So that's what we're expecting. So we expect October, November to be a good festive season months. So that's why I think a lot of inventory build-up happens in the September month. So we see the stock going up.
No, in terms of the,
what is the sentiment on the ground? You would be speaking to retailers, your outlets as well. Are you, one got the sense up until, recently that because of two poor monsoons, the sentiment is very poor. Is there a turn? Mr. Madan, you can hear me?
The voice is not audible.
Okay, I was asking you, do you see a turn in sentiment after two bad monsoons? Is demand picking up at all?
Yeah, so we expect, I think the industry has firstly bottomed out with the kind of degrowth which we have seen in the last 1 year. So we expect the sentiment will start showing some recovery now from this month onwards.
Okay, so can you give us some numbers when you say industry has bottomed out? What kind of growth would you expect for the next couple of months? What's the growth that you're looking at in the festive months of, October, November?
See, I think October we are expecting will be more or less a flattish month. So there will not be any degrowth, the kind of degrowth which you've seen in the last 6 months in this financial year. So about 18-20 odd % degrowth has been happening. And September was mostly 34% degrowth. So October we expect to be more or less flattish month, but November month, where we see all these festivities also coming in, with Diwali coming in November. So we see November will show good growth. So overall, I think for the quarter we're looking at about 12 to 15% growth number. And still, I think for the full year fiscal for this year, we expect it will be on the optimistic side, it will be a flattish year. So I think maybe on the realistic side, we'll probably put it slightly downturn now.
So you mean about 27,000 units is what you're expecting by way of sales for the full year?
No, 26,000 we already done in the first half. So I think full year we are still expecting to be closing about somewhere between 55 to 58,000 units.
No, that's what I meant. Will the second half be just like the first half, or will it be better than 26,000?
No, it will be better than 26,000.
Okay.
If you can just give us a sense of, what's happening as far as rural demand is concerned. I heard you mention that, at best you can expect a flat growth. But given that the monsoons have been so deficient, is there any pickup in rural demand at all? And by when do you expect, that the about 10-20% growth to resurface in the rural markets?
Well, I think it all depends on how the winter cropping really goes. So in the Rabi season, how the sowing happens in the winter months, and then again with the kind of monsoon or the unseasonal rain which we saw in the last 2 years happening in February, March season. If that doesn't get repeated this year, so we expect probably the Rabi crop will be good this time. So that can show some improvement in sentiments happening in the rural side. Though the kind of 20% growth I don't think is visible as of now. So maybe it will probably take maybe a year or more really for that thing to happen.
Okay, so if it is 55,000, about 55,000 units this year, how much better would the next financial year be?
So at least we'll be exiting this fiscal year with a growth number. So we expect that sort of growth should continue. So maybe 7 to 8% growth is what we are looking at in at least in the next 2 years time frame.
Wouldn't margins be much better this time?
Yeah, so the cost initiative that the company has taken obviously are going to help us in terms of achieving a good margin. So I think you will see the margin expansion happening in the second half this year again. So we expect to close the tractor business at least with a double-digit EBIT margin this year.
Okay, double-digit EBIT margins in the tractor business. What about the construction equipment business, Mr. Madan? Because over there, you continue to see EBIT losses. And the last time when we spoke with you, you had indicated that there are some big orders from the government that you're awaiting in the construction equipment business. Have those orders come through, and what could the quantum be?
No, so as of now, the visibility on the government order is not really there. So probably things will start moving up only from next fiscal. So still, I think the second half normally for construction industry is better than the first half. So we expect overall, I think number in H2 will be better than H1 on the construction segment as well. But there are no big orders visible as of now from the government side.
Not even in railway equipment?
No, railway is showing some sort of improvement. So there we got some good order books. So 59-60 crores order book is there in the railway business. So that's showing some good growth. So we'll see, I think, 10-15% growth happening on the railway side.
You had minor EBIT losses in construction equipment and auto ancillaries. Will that be wiped out, or has it already been wiped out?
No, so auto we expecting, I think we'll be able to take a call on that business by end of this year. So we expect by Q4 we'll be able to make it a break-even sort of numbers on auto component. The construction probably will continue to bleed for some time more till the time we see at least the break-even level sort of volume sale getting achieved, which for us is about 250 machines a month roughly.
You plan to persist with both these units? You won't think of hiving them?
No, so like you said, auto component is one which we are really willing to look at as strategic partners. So construction, we expect, I think the infra story for India is still intact and the growth will likely happen in the segment. So that's one segment we will continue to stick with for the time being.
Okay, so will you get in some strategic partner before the end of this fiscal itself in the auto segment, you think?
So let's see, we are open. So we are open for discussion with various partners. So we are actually in touch with some other partner right now, but as of now the things are not really finalized, so I can't really talk about it.
Okay. You were telling us about the railway equipment business. I couldn't get the number. What's the exact order book that you're sitting on in the railway business? And on a base of around 50 crores revenues, how much do you think your railway business can grow?
So today we got an order book of about 55 to 60 odd crores. So it used to be an average of 45 to 48 odd crores. So there's some growth on the order book, about 20 odd % has happened. So this year we expect the railway business to close at about 200 crores plus sort of top line. And going forward we can look at easily a growth of 10 to 15% on that business easily.
Okay. You said your margins will improve. Will there be any effort on your part to reduce prices, give discounts and thereby boost volumes?
No, so as of now we're not banking on passing on discounts to the market, so there's not been a strategy. So I think the strategy for Escorts has always been to offer a better product mix, but it's the cost initiative really which will start paying up from H2 onwards.
Do interest rates make a big difference? Are a lot of your tractors bought on EMIs?
Yes, so roughly 50% sale is happening through the financing options. So, but I don't think 0.5% rate cut will really make a major difference to the demand.
All right, Mr. Madan, we'll let you go on that note. Thank you very much for joining us, but this is really a positive to say that the worst is over and that the second half sales will be better than the first half sales, about a 7 to 8% growth in overall revenues and volumes is expected this and the next year, more importantly. So downturn at least is behind us. That's the word coming in from Escorts.